Hello and welcome back to Southbank Live. We're now on episode 31. We are broadcasting this at a slightly different hour as our guest today has quite a different time zone from us. So while it is lunchtime here in the UK, Nikolai Hubble is over in Japan, and I believe it's quite late in the evening, isn't it, Nikolai?
Yeah, it depends what you call late, Boaz, but it is for me.
Yeah, well, thanks so much for joining us, Nikolai. It will be a very good discussion. It's been a very long time, actually, since we've had a decent chat about the markets and about pretty much anything. And you've had a very interesting experience in Japan, as of course the Japanese response to COVID has been much different. But for all those who are watching us today, thanks so much for joining in and tuning in during the lunchtime period. I know it's not the best time for everybody, so I imagine a lot of people will be watching this as a recording later on. But thank you all for those who have tuned in and for those who are watching. If you can give us a subscribe or a like, we'd very much appreciate it. But of course, only if you are actually enjoying this content. Now, Nikolai here is a contrarian investor, very outspoken regarding his investment theses and indeed some of his political views, so we maybe won't go too deep into that in this show. But Nikolai, tell us what life has been like in Japan throughout the COVID period.
Yeah, it's been quite good. I left in October of 2020, so just before the second lockdown, I think it was. And I can definitely tell you that it's been different to being in the UK during that first lockdown. But all of this has to be sort of prefaced by saying that my daughter was born in January of 2020. So it's been an unusual 2 years for me anyway, and the pandemic hasn't hit us much. But I think actually early this week, for the first time, the pandemic had a real negative effect on me. And I say that, with complete sympathy to the people that have been absolutely hammered by this pandemic or the government policies that have gone with the pandemic. But I think it is interesting that some people were not impacted. And I think that's part of what's going on politically here. So although I'm very much against lockdowns, it hasn't impacted me personally until this week when we were sort of ceremoniously thrown out of an indoor child playground because my daughter refused to wear a mask. She's about 2 years and a few weeks old. So it was an interesting experience that, for the first time, the pandemic and the lockdowns and the policies and the mandates have actually hit home for me. And it was a bit uncomfortable, obviously. But other than that, my life hasn't been really impacted by any of this. Not in a bad way, at least. Obviously, working from home was a big impact. But Japan has this reputation, of course, of the government not having acted as heavy-handedly as in other places. And I think part of that's a misnomer because like in Australia or in the US, a lot of the policies were at the state level in Japan rather than at the national level. And what different parts of the country differed. Just like in the US and Australia, the other two good examples of this. So I think when people say, there's no lockdown in Japan, well, I think some of the cities were close to that lockdown. I also think it's worth noting that Japanese people's compliance with lockdowns is much higher, as far as I can tell, even if it's a voluntary one. The best example of this is that in Japan, the people living in the countryside, the parents, didn't want their children, their grown-up children, to come back to the countryside to try and protect themselves from COVID, to try and avoid COVID. They actually wanted their kids to stay in the city because they didn't want to have, the reputational shame of having their child be the one that brought COVID to the little town, to the little village. So there was a big cultural difference between Japan and Western societies, mattered more to Japan's COVID story. We should also mention that over the last year, after in a very long period of wondering why Japan was so successful with COVID, the worm has turned and cases exploded. And for the first time here in the local area, COVID is really bad. I'm not in a big city. I'm in a mid-sized town. For the first time, COVID's really hit here, and people are really aware of it, and it's a real issue. As I see it, there's a big divide between the cities and the countryside. So I haven't had a COVID test since the airport when I arrived in Japan in October of 2020. I understand in the UK and the rest of Europe and Australia, testing is incredibly common and incredibly widespread. Here, a lot of people haven't had COVID yet. It seems to me that in the UK and from what I've heard from Canada and Australia, people have had COVID, and that's completely normal. Here, I think it's still a big is still considered a big drama, a big issue. All of the low level of government involvement in society, such as masking, continues here. There hasn't been a big increase or a decrease over the various parts of the pandemic. So everyone here still wears masks, even though I'm not sure whether the government requires it or not. So I think it feels like, as is typical of Japan, everything's different. You can't quite understand what's going on, but it all seems to work.
That's a very interesting review of the Japanese experience. Thanks for sharing that with us, Nikolai. It's always interesting to hear what goes on over there, because a lot of what we see in the West about Japan, I always feel like there's so many different missing pieces of the jigsaw puzzle. We only see kind of like the end product, as it were. Andrew and Barry in the chat. Good afternoon to both of you. Thanks for joining us. It is good to have a live not just a live audience, but live input from folks. So if you do have any comments or you do have any questions for Nikolai, do feel free to leave it in the live chat. Now, Nikolai, just in terms of if we're looking at markets today, we've seen an awful lot of hoo-ha around Russia and Ukraine. I was wondering what your thoughts were on that, given you take quite a close look at geopolitical affairs in general, and you're often quite you definitely go against the grain, and you often get it right. So I'd be interested to hear what you think about the Russia-Ukraine situation and what might happen in the near future.
Yeah, I think the first thing to note is actually the same thing that I often repeated about the pandemic, which is that the media in the different countries are reporting completely different claims about the same pieces of information, conveying completely different themes, portraying the same speeches in completely different ways. And I don't understand Japanese, but I follow the Japanese media to the extent that there's some reporting in English. The German I read all the time, the English, the Irish, the American, obviously, because we follow the American and the Australian. That's the media reporting I check every day. And they just completely diverged over this Russia story again. And I think that was the main theme that people have been pointing out about the story itself as well, where Ukraine was portraying this risk of an invasion in a very different way to what the UK and the US was doing. I think it's quite noticeable that the leaders who were in most dire straits in the domestic polling were the ones pushing the narrative most. So that's the American president and the UK prime minister. They were having trouble for various reasons that had nothing to do with Russia or Ukraine, and they were the ones that went after Putin the hardest. So I think there's that classic, when you're struggling at home, try and point to some sort of foreign policy issue, a foreign enemy. I think that was a key part of it. I'm definitely leaning towards no invasion, no sort of political crisis happening. I don't understand, why there would be one. I think if Ukraine or some of the other nations in the area continue to pursue getting into NATO, or the West continues to push for that, at some point there might be a risk. But at the moment, I think it was signaling that would be overstepping the mark for Putin, and that if that happens, he would be forced to act as he sees it. So I don't know who's got the right end of the argument in all of this. And in geopolitics, that usually doesn't matter anyway, because if you're an investor, you've got to figure out what's going to happen. And usually what's going on behind the scenes is probably more important than what we're seeing in the media and in the news story. So I think buying stocks that are going to benefit from a return to normality and return to more peaceful relations is a good idea now, and was a good idea a few days ago. And I think, I don't know if I want to give it away yet, Boaz, but that may be my long for the week. I can narrow it down in a later part of the segment. But I think what you've got to understand about the broader situation, I get a lot of these ideas from Jim Rickards, from working with Jim Rickards in his Australian newsletter, that there isn't a whole lot to gain for anyone here other than a bit of a political drama. So if you look at what the incentives are, that's the most obvious outcome. And I like public choice theory economics, where you don't think about what's in Russia's interest or what's in America's interest. You look at individuals and what incentives individuals face, because that's where the decisions are made. And Russia doesn't make a decision; it's Putin makes a decision, and America doesn't make a decision about what's in America's interest. It's a few people at the top of the American political society who are thinking about themselves. And that would suggest that there's no further action beyond what we've seen so far.
That's very interesting. Of course, you are the author of How the Euro Dies, taking a look at some of the structural issues within the Eurozone and the euro currency and the manner in which it was created and the manner in which it sustains itself. A big part of the Russia story has been Russia and its withholding of energy to continental Europe, specifically Germany, and making sure that Russia gets what it wants before it starts getting the gas going back into Germany. I'd be interested to know what your thoughts on that are and what we can take away from that as investors. I mean, what's the future of the German-Russian relationship? Because Germany is such a huge stakeholder in the EU project, and yet it must kowtow to some degree to Russia.
Yeah, every time I open the UK media, the top story is something to do with Russia, and when I check in the German media, it's somewhere in the middle, and it's completely different terminology and completely different expectations that they're furthering. So I think the Germans think it's all a bit of drama that they're quite used to. The Germans see themselves as stuck between the US and the Russians. There's a general feeling about the Germans right now that it's a bit of a headless chicken. The government's a bit of a headless chicken, sort of running around, not understanding where it's going, because we're in this post-Merkel period where things were very predictable for a very long time, and now you've got a coalition government that's a bit confused and chaotic and it's got some odd views. I think the best way to think about this is what happened with the nuclear story in Europe, where some nations were against bringing nuclear power into the green taxonomy, the green, what's permitted in under the EU rules is green, and some were in favor of it. And the Germans had just been shutting down their nuclear power plants, and the French wanted to up the nuclear efforts. And so there was this divide. And I think in the end, right now, the EU's proposal is to include gas and nuclear in that setup. So the Germans feel sort of slighted right now within the EU, and they've realized that there's a bit of a change there. So it's not just the Russia situation; it's sort of energy much more broadly right now. And the Germans have just been disappointed in what they wanted at the EU level, despite having the EU commissioner a German. So there's a lot of what Germans would consider to be domestic issues also going on at the same time as this Russia gas story. And I think that the Germans are focused on a much more broader energy story than the markets and the media in the English-speaking countries, which are focused on the Ukraine and Gazprom and that story.
That's interesting. I remember you were always very bullish on Gazprom, the much hated, much controversial Russian energy firm. It does sponsor, I think it sponsors a fair bit of the football these days, though, of course, it's much maligned now because everyone sees Russia as the big baddie out there. What are your thoughts on the Russian stock market? Because it seems like a very interesting opportunity. The classic Rothschild saying, if any Rothschild ever said it, is buy on the sound of cannons and buy on the sound of cannons and sell on the sound of trumpets, and which then got through loads of different translations ends up being buy when there's blood on the streets, etc., etc. And whenever there is a big Russia furore in the geopolitical space, there are these interesting opportunities that show up in the Russian stock market, because the Russian stock market always gets hit very hard by that, and if things do emerge well, then things go well for those who did buy on the sound of cannons or on the threat of cannons from the newspapers. What's your take on the Russian stock market today?
Yeah, it's quite simple. If you look back at when the Crimea story happened, that was a fantastic buying opportunity for Russian stocks. They actually invaded that time too. There wasn't much of a crash, and the subsequent rally was huge. I can't remember the multiple now. So this is a buying opportunity. The question is when. I think that this vilification of Russia, even if it's valid and hard earned by the Russians, I don't think it's in many people's incentive to continue it or to actually make it hit economically and financially, because you'd be shooting yourself in the foot, because so many of those stocks listed in the UK, so many people from the UK investors own them. And they've got this gas that the EU has admitted it's going to need as part of this transition by bringing it into the taxonomy. So, you can't expect the gas and punish them for it at the same time. There's got to be some sort of maybe not peace, but there's got to be some sort of allowance for things to continue, for the gas to continue to flow.
Yeah. Would you think? Would you be prepared to give us an idea on timing for what you could expect for that, or the kind of concessions that Russia would need before they did that?
You mean timing to buy into the Russian stock market?
Yeah.
Yeah, I think it would have been about a week and a half ago. I'm just trying to remember when my Gold Stock Fortunes monthly issue was published. That's all I'm going to say. Yeah, I don't think the timing matters too much. I would start buying them now if you haven't already, and continue. And I would space those purchases out, because if something does happen, obviously the price will go down, and then you continue to buy. Then what you're really playing is a longer term return to normality, or something more resembling normality. And I don't think there's going to be some sort of massive meltdown, or if there is, I think your stock market returns are going to be the least of your worry.
That's a good way of putting it. Good afternoon to Mike and to John in the chat, who wish us say hello and wish us a good afternoon. John is able to watch live for the first time thanks to the timing, so it's good to hear that some people have been able to actually tune in this time rather than just watch the repeats. Skeptimistic has provided their long for the week, which is yoga. They've just discovered it, and it's great for relaxation. So I'm very pleased to hear that some people are providing their own long and short. If yoga is your long, Skeptimistic, I would be interested to hear what your short this week. That would be an interesting one. Moving to we shall do our long and short later on in the show, and of course I would be very interested for all those watching if you could provide your own long and short for the week. Just as a clarification, the long short segment, which we shamelessly stole from a now defunct financial podcast called Adventures in Finance. It was a very good one. They did the long short segment for the first time, and I nicked it for this because they're not doing that podcast anymore. But in the long short segment, we take a news story or a phenomenon that we've noticed over the past week or over the past month that we're bullish on, and it doesn't need to be an asset, can be a behavior or another phenomenon, and we give that as our long, and then contrasting with that, we give our short, what we're bearish on. So for anyone watching this live, it would be interested to hear what your long and shorts are for this week. Interestingly, on the gold story, which of course you take a very active interest in, Nikolai, Robbie Head said that his gold dealer had said the price had dropped because of the Russian withdrawal rumor, and managed to get some new 2022 sovereigns on the cheap, which is very, very nice to hear. It is interesting to see the gold market really start to pick up recently. I think this is something we should discuss a bit more, Nikolai, especially given our shared interest in gold. We have seen precious metals more broadly have a nice time during the fear-driven narratives of the Russia confrontation. What's your thoughts on that? Because if you don't think anything major is going to happen with the Russia-Ukraine situation, and it's the Russia-Ukraine situation that's created a big surge in gold recently, surely that means gold is in for a bad time, perhaps?
Yeah, well, there's obviously a whole number of factors affecting the gold price. I'm perfectly happy to accept that the recent increase in the gold price has been due to the Russian story. Although I think that would be quite a minor argument. I think there will be better geopolitical hedges than the gold price for that. And I think the real narratives are much deeper, much more all-encompassing, much more long-term for the gold price. We were in a golden pennant, I've been calling it. So pennant formation, meaning that the trading range is getting narrower and narrower. And recently we've had a breakout to the upside. And it's possible that was because of the geopolitical drama with Russia. But the pennant was so narrow, it had to happen quite soon. And I think there are better narratives for explaining what's going on. So if we look back through history, gold actually tends to outperform once a rate hiking cycle has begun. Now, we're not quite there yet, but in the US at least, but it's starting. And so that might be the birth of this new gold bull market that I'm anticipating, at least. The way I've been writing about this in Fortune and Freedom is that The gold price seems to be 2 steps ahead, whereas, obviously financial markets are supposed to discount the future. They're supposed to anticipate the future. So they think 1 step ahead. I think the gold price has been 2 steps ahead. So back when it rallied to all-time highs at the beginning of 2020, into mid 2020, it was pricing in the environment we're in now, which was this extreme negative real interest rates and spike in inflation, monetary policy getting caught behind. Since then, it trended down from August of 2020, and it priced in what's happening at the moment, what stock markets are reacting to at the moment, which is this fear of interest rates causing a recession or causing another crisis. And the gold price remains 2 steps ahead. So what it's pricing in now is the response to a recession because of higher interest rates, which will be, again, looser monetary policy. So I think the gold price is looking ahead a little bit further than the stock market and saying, well, if interest rates go up and there's some sort of crash, which is what the stock market is telling us and the bond market is telling us, then they're just going to have to do more QE, lower interest rates again, and that's going to be bring back inflation and all of that, and that's what's underlying this gold price move if it continues. That, I think, is a more powerful narrative than the Russia story. The way to maybe measure and distinguish this is to see what happens to Russian gold stocks.
Yeah, the Russian gold mining industry is a very interesting one too, because of course you have the volatility of gold and the some of the risk that's associated with that, on top of the geopolitical issues that we have, and then issues with governance within Russia. But you've taken quite a close interest in that, haven't you, Nikolai?
Yeah, I've definitely focused on Russian gold stocks a lot with Owen Tracy and Gold Stock Fortunes. I think he said recently in our Hard Money Council roundtable that if you're looking for gold mines with lots of gold, then Russia's a good place to look. We actually sold out very early on in the Ukraine drama at much higher levels than those gold stocks are trading at now to protect ourselves from what's happened during that Russian mess. And yeah, I can't say what we're doing now, but you can sort of figure it out for yourself.
Modena Man says, looking at the gold price, it does seem to move either up or down depending on the news which is being reported on the Ukraine situation. I guess when you're looking at the golden pennant as you're describing, Nikolai, how big is this formation? I mean, how many years are we saying that gold has been forming this?
Yeah, since August of 2020, so we've had this narrowing. The question is whether the gold price bottomed out a few weeks ago. I can't remember the exact date, but our colleague Charlie Morris pointed out that it's possible, based on his technical analysis, that gold bottomed actually as the rate hiking cycles of central banks around the world began, and that we've already seen this typical upcycle of gold alongside interest rates that we saw in the 2000s, and we've seen in the past in the 70s, for example, which is counterintuitive to what most gold investors think. You think that higher interest rates go with a falling gold price because they make the opportunity cost higher by being invested in gold, which earns no interest relative to having your money in the bank. But during interest rate hiking cycles, central banks are usually behind the curve, meaning they're not keeping up with inflation. So actually that gap, that real interest rate adjusted for inflation, is actually getting worse. And so the benefit of holding gold is actually getting greater, usually during rate hike cycles. It definitely looks like that's what's going on right now. We've got the inflation rate accelerating, and we've got monetary policy. I mean, the idea that they're going to be able to, contain inflation by hiking interest rates. Well, the last time we had inflation at these heights, interest rates were like double digits. So it's just not going to happen, at least not that way. They might trigger some sort of debt crisis or recession in the meantime, which would bring inflation down. But the idea that central banks are in control is not plausible to me, and that's when gold shines.
We get a question from Kay, who asks, is all this Russia conflict thing just to increase oil and gas prices, since this makes up the majority of Russia's economy? Very interesting question. Russia has been on the receiving end a lot of criticism, saying that Russia creates all of this mischief in the geopolitical space in order to raise oil and gas prices. So, both the Russian economy does well and the Russian government gets lots of money. I always found this is quite interesting, given how the US has become very large in the oil production space. So whereas when the US was sort of the unipolar power and it relied on the rest of the world being stable in order to import all of the oil it needs, now that the US produces so much oil thanks to the fracking industry, it actually benefits from geopolitical mischief in the manner which Russia did. But now they're both at it. So I guess given the oil price, I think Brent crude at the moment is $92. It's almost like it's win-win for both sides. Nikolai, what would be your take on that?
Yeah, but it's a narrow part of both sides, right? They're not oil executives in Russia. There's lots of other things going on in America. Lots of people drive cars, so I don't think it's a redistribution. That's the better way to put it. It's a redistribution of wealth from everyone to the oil and gas sector. I think it's plausible. That is a big part of this, but it's not like oil and gas prices were struggling before this Ukraine mess. If this is the argument that they're trying to force, then I think the reason for it would be political trouble inside Europe, or to exacerbate the political trouble inside Europe of higher energy prices. I tweeted a few weeks ago saying, now that winter is ending and we're in Europe, we're going to be using a lot less energy. How do you maintain this political pressure inside Europe that the gas price and the oil price has caused? Well, Ukraine's the breadbasket of the world, or at least Europe. So threatening to invade the breadbasket and forcing up food prices next during summer is the logical way to do it. So this angle does work. It does make a lot of sense to me, but I wonder whether you can't just do in a cost benefit analysis. You can't just do half the analysis. So the benefits are the higher oil price, higher gas price, good for some parts, but the costs, especially with right now in the media, the high fuel price, high gas price, the costs are very, very heavy as well. I think that's also true in Russia to some extent. Perhaps you could say that politicians only respond to the oligarchs and to the campaign donations of certain large companies. That's plausible too. But they've still got to win elections. At least they do in the US.
A redistribution of wealth from everyone to Aberdeen sounds very good to me, Nikolai. I must say. Deppel comments, the gold-silver ratio is out of whack. Indeed it is, and it has been for a very long time now. And asks what is going on with silver. Good question. Nikolai, what is your take on that? Because everyone has a different view on the gold-silver ratio and whether or not it still has the kind of weight that it used to have when we're on but when silver and gold were currencies. Now neither of them are, though gold is still kind of monetized. Silver is not at all. Do you think the gold silver ratio is telling us anything? Because it is at quite an extreme.
Yeah, I'm worried about silver actually, because I think that this monetary argument grows weaker in a modern world where we're just not going to be using gold and silver coins anymore. There's going to be some sort of indirect, backed, even if it's not a government system, even if it's a free market system, free banking system, cryptocurrencies, whatever it is, the blockchain. I just don't think silver's role, which was always that it's the more usable version of gold and more easily spendable because of the denominations are smaller, that falls away, I think, in the modern world. So I'm worried about that argument for silver, at least. The use of silver in modern technologies, in the energy side of things, I think that's a good bull market. But if you look at the mining side of things, silver's a big byproduct of gold mining and of mining of other resources. It feels like the focus is on copper rather than silver. And I think there are better ways to play the angles that people who like silver are often advocating. Such as I think you're interested in platinum and palladium and some of those angles. I would pay more attention there. Silver seems to be the awkward in between of various different stories: the monetary story, the green tech story, the tech story, and I just don't see where it's going to fit in its own right.
A metal for all seasons, perhaps. I do feel like silver there will be a narrative that really captures it, especially when if the inflation that we're in at the minute does continue. A lot of people is still going to have that sort of poor man's gold quality where, okay, gold is costing me 1,500 quid an ounce. and silver is like 20, 25. I still feel it'll absorb a lot of that. But of course, we have to get there. And, silver investors, the silver market has been quite exhausted, I think. Even after Reddit and the Wall Street Bets crowd were playing around with it last year, the market still got rather exhausted, and it's not massively delivered because there are all the other speculative opportunities in crypto and things like that. Though, actually, on the topic of the other precious metals, my long for this week is platinum. Actually, it's been interesting to see platinum has started to have quite a strong surge over the past couple of weeks. It may have something to do with the Russia Ukraine thing again, simply because Russia is so big in the platinum group metals in general. But at the same time, it feels like platinum is going to do very well in an inflationary context. And given the fact that it was the Queen's Platinum Jubilee recently, it does feel like just a historically nice place for a platinum bull market to begin. Nikolai, you did refer to your long short. I think it'd be probably a good time to go for your long short now.
Yeah, my long is Russian gold miners. For all the reasons we've gone into, I think the short. Are we sticking to a 1 week time frame here, or am I allowed to lengthen the time period that the short can play out? If I
Whatever
get
you want.
a month and a half out, 2 months, my short is going to be the UK's net zero policy. I think it's in a bit of trouble. I think it's in significantly more trouble than you would expect, even given the recent headlines, which already suggest that it's in a bit of trouble. But a little birdie told me that you might see some political action that leads to that target being in big trouble soon.
Oh wow! Would you care to elaborate a little bit on that? You don't need to reveal any sources, of course.
Well, my co-conspirator at Fortune and Freedom has something to do with it.
Oh, right. Okay. Well, there you have it, folks. If you are interested in learning more about this, perhaps you will read some of that in Fortune and Freedom, the newsletter which Nikolai helps edit. We do have some interesting comments in the chat. Skeptimistic has actually given us what his short for the week is, as yoga is his long for the week. Skeptimistic is short work stress, which is decreasing as he or she invests more in yoga, that and high flying stocks that have no revenues and minimal assets, of course. On the topic of high flying stocks that have no revenues and minimal assets, there are, there are quite a few of those out there, Nikolai. I was wondering what your thoughts are on those. In an inflationary environment, do you really need to have assets to do well? Is that where these stocks are going to get wrecked?
I would go on a case by case basis for this one because a lot of those stocks are quite unique in their business models. And some of them I think are going to survive and do well and find revenue. And some of them won't. And I don't know which ones are which. If you look back at the experience of the tech bubble, if you bought the NASDAQ, it crashed. But if you picked the right stocks within the tech bubble story, you would have done very well. What makes those interesting, a lot of them, is they're monopolistic in several ways because of the nature of their industry often. So that's a really strong situation. A lot of people just don't understand those companies. And perhaps nobody understands them. But I remember when Mark Zuckerberg was called in front of, I think it was a congressional hearing of some sort. And a few of the senators, or one at least, didn't know how Facebook makes money. He wasn't aware of the fact that Facebook has a great deal of revenue, despite the fact that it doesn't charge its users to sign up and be on Facebook. So I think there's a very big misunderstanding, as there is in much of finance and the stock market, about what's actually going on in some of these companies. So I find it quite difficult to paint them with a broad brush. The threat is that things like what happened to Facebook recently, where the users peak and things go badly, that's a bit of a worry. It seems to me that a lot of them have the pricing power that would make you focus on them in an inflationary situation, that they are able to raise prices without a lot of resistance from their revenue sources. So I would actually be looking at buying into some of those stocks after they've corrected so much. And I know Rob Marstrand from UK Independent Wealth has been, until recently, avoiding that sector like the plague. It was one of the key founding ideas of both Fortune and Freedom and UK Independent Wealth, that these stocks are overvalued and you should stay away from them. Now that they've crashed, I recall him saying that actually he's quite interested in some of them and doing some analysis on some of them about whether their price earnings ratios have actually started to look a little bit more sensible. If you'd invest in tech stocks after the tech bubble burst, you probably would have done quite well.
Very measured response to that. On the topic of what does well in an inflationary environment, and we have of course got a comment here from John, who asked, "Is the USA actually a net oil exporter? It is certainly a net gas exporter, thanks to shale gas exported as LNG." Now, I'm not an expert in that industry or that sector, John, though I do believe that the USA is a net oil exporter on paper. However, it's not like all of the oil that apologies for that. The police are screaming down the road. It's not like that the US actually consumes all of the oil that it fracks. So it doesn't just stay in the country and everyone drives around with it. It needs to be mixed with sourer, heavier crudes because it's very light and sweet. And as a result, on paper, the amount of oil that leaves the country is greater than the amount that it imports. However, it's not like all the oil that they produce internally stays internally. It does get mixed around. Nikolai, do correct me on that if I'm wrong, because of course over the last 2 years, the oil exporting and importing has gone completely screwed up.
Yeah, it's a bit of a question of technical definitions. I think Singapore is a big oil exporter because they bring in a lot of the oil and then refine it and then pass it on. And so the value of what comes in is low and the value of the oil that comes out is high. And so they're considered by dollar value to be an oil exporter. And it all gets a bit weird with the particular definitions of the oil. As I recall, the US had technically become an oil exporter under Trump for the first time in 70 years or something crazy like that. And then during the Biden presidency, they went back into being an oil importer. And the campaign over the Keystone pipeline was part of this drama of that particular tipping point of being an oil exporter and importer. It's a political football, even though we're talking about these small margins just at the supply and demand peak for a country. It's worth mentioning here that the UK and the Dutch have recently walked back the blockade of oil and gas production at certain key fields that they'd shut down as part of their green energy commitment. So I think the worm is already turning on this in a lot of different places around the world. I was reading how much banks have lent or funded oil and gas exploration recently, and it's still a huge amount. So, if it isn't UK banks doing that and UK gas and Dutch gas fields doing it, it's going to be somewhere else because people still need that stuff.
Yeah. On that note, when you're talking about when we're talking about inflation in general, we're talking about the oil and gas sector, and you being very short on our commitments to being a green and renewable economy in the future. What's your take on the frackers at the moment? Because of course they're very much hated for being frackers. Ultimately, I mean, they get attacked for all manner of things. But interestingly, they have become really much more strict with themselves on what they're splashing all of this cash on. So of course the banks have been very generous, especially in the 2010s, with writing them enormous checks to go out and drill wherever they want in the Permian Basin or elsewhere for that matter. But recently they've got nice high oil prices, and interestingly, despite there being high oil prices, they have not been able to, or have been unwilling to, just flood the market with all of this shale oil. I was interested in what your take is on that, because it sounds like a very bullish story to me, and because of it being hated by so many politicos, it's an undervalued sector.
I'm going to answer that question with an analogy from the gold sector. I was working on a monthly issue that I'm still hoping to publish at some point in the future. And the underlying idea was that the people in the gold mining industry understand that they can make more money based on a share price booming and potentially busting thereafter than they can on starting a successful company that's going to mine lots of gold and sell that gold and make revenue. reinvest that revenue in the next mine, and so on and so forth. That the stock market has created an opportunity to magnify the gains of a successful gold project so dramatically that their focus now is on the speculative side rather than the mining side, the gold, right? And I wonder whether the same thing's happening in the fracking story, because that's the marginal producer in this story. So it's especially volatile in terms of the speculative capital gains or capital losses, and yet they're still producing the same gas that gets sold in a global market at the same price. Not technically globally the same price, but they're price takers, not price makers. So I suspect that the story here lies in the gains in the share price, games with an M, not gains, in the share price fluctuations. And to have those, you need to have busts as well as the booms. And I think a lot of what the banks did in funding all of this was not about funding a big industry of the future, but funding the latest speculative mayhem of the stock market at the time, and that might well come back again to for another round. And of course, we've seen loads of examples in the stock market in the last, well, I don't know when it started now, about a year and a half of stocks booming and busting inexplicably. And I think fracking lends itself especially well to that. I don't know if you should call it manipulation or just I'd just say games in the stock market.
Yeah, an interesting observation on that. Seamus suggests that the police that were screaming past my house just a few minutes ago was the fashion police looking for John Butler. Very amusing, Seamus. I'll be sure to pass that on to John. Apple asks, hello, Nick and Boaz, just joined. Hello, Apple. Not long ago, China was hailed as the future, but after COVID, this doesn't look so sure. What do you think? Yeah, China was hailed as the future for quite a while. Myself and Nikolai here are probably not the best people to ask, not the best promoters of the Chinese Communist Party and its strategies. But Nikolai, what do you think? How do you think the rest of the world is viewing China in the context of COVID-19? Because you still find plenty of people who say, the Chinese model, this is the future. This is how we need to be organizing our own economies and destroying people's civil liberties, etc., etc. What do you think about that? Do you think that's changed? Do you think this is like almost like a Sputnik moment with COVID-19?
Yeah, just to clarify, Boaz and I wrote a report about the Xinjiang story. And that report actually began with an apology that said, we're sorry for sending you this because it was such awful reading. And we took the logic to a more useful investor side, which is to avoid China. And I think that's proved nice and accurate. But the most interesting part of this story to me, right, is if scientists can prove that the COVID virus leaked from a Wuhan lab, what happens then? Does the world take some sort of action on this? And Jim Rickards has been writing about the fact that could actually happen, that the world could, whatever the word sue in this context means, the world could sue China for having allowed this virus to escape, for not having locked down the country when they knew, for having tried to cover it up, for having claimed that there wasn't an issue, and so on and so forth. And of course, China wouldn't pay up. But Jim Rickards believes that there's a chance that the various governments of the world could collect on that compensation claim, basically by defaulting on the bonds that China holds, which is an interesting idea, but it could actually undermine capital markets. That's the thought process that he follows it onto. So if the countries in the world that are not friendly to the US realize that the US can sort of write off the debt that they hold for geopolitical reasons, then the incentive is no longer to hold it, which would potentially cause complete mayhem in the bond market and in the US dollar, the value of the US dollar. So I think there's a risk of that playing out. I don't know if it's going to play out. I don't think Jim specifically predicts it, but he's warning about that risk in his book, The New Great Depression. He goes into the details quite a bit. I think that angle and the threat of that angle is going to play quite hard into politics over the next few years. The idea of being able to blame China for what happened and for all of the consequences that we can blame on the COVID pandemic that come hereafter, which are still unfolding. I'm convinced of that. If we go into some sort of massive debt crisis, I think China's going to become the scapegoat, rightly or wrongly. I shouldn't say scapegoat because maybe they do deserve the blame. But I think that geopolitical angle should be at the top of investors' lists, certainly above Russia. And I think that just the demographics alone of China mean that they might never, achieve anywhere near the presumed and anticipated level of power and economic might, and perhaps geopolitical might that we all assumed, not we all, many of us assumed and presumed would happen. And I wonder what that would mean for the stocks and the companies and the investments in China. And I know it's been an interesting political football, hasn't it, with certain big names in the finance industry talking about whether we should be lecturing China on morals and for the slave labor and forced labor and human rights and things like that. It's disappointing where these things jump into the Olympic realm. My dad carried the English flag in the Brisbane Commonwealth Games and the English flag, and he was at the Moscow Olympics, so he boycotted the UK government's boycott of the Moscow Olympics and just went. So I'm just sad every time politics goes into the Olympics.
It is interesting to see that such a boycott did take place with the Winter Olympics. I think because it does display that there is political might behind this behind confronting China as it goes for reparations.
Wasn't that boycott was the politicians and the quangos didn't go to China, right? That was the extent of the boycott. That's not a boycott. That's just common sense. I mean, why they're there in the first place? They shouldn't be anywhere. I mean, that's just maybe that makes sense. They have the Chinese Winter Olympics, but none of the others. They shouldn't be there.
Yeah, I mean, one of the things I'm interested in sort of exploring more, certainly in the future, is something I wonder about a lot. Is you and I both predicted there will be a very broad backlash against China for its atrocities in Xinjiang, and this will, of course, will have major market implications as well, because China is the second largest economy, at least on paper, and has been very successful in luring investors into it. And there's what I call market McCarthyism, which I think we're going to see a lot more of in the 2020s, where you see it's not just businesses that operate in China, but individuals who have very strong links to the Chinese Communist Party, and this includes hedge funders, it includes lots of business people and large investors. And I'm just wondering what's going to happen to them in the future, and whether or not they'll be vilified as appeasers or collaborators, as certain other people throughout history have been looked at retroactively. Have you any thoughts on where, because the Australian experience, as of course you have a very strong Australian connection, Nikolai, the Australian experience with China is much different from what we have here in the UK. I'd be interested in knowing where you think that relationship's going to go, because China's Australia's largest trading partner, and yet Australia is also a very staunch ally of the US and is very, very keen on extending its security relationship with the US.
Yeah, I want to preface this by saying that this story or this angle of attack didn't work with the Russians, right? Sort of the sanctions idea of sanctioning the oligarchs. And I mean, it's funny that so many people consider us, the UK, being heavy-handed against Russia with sanctions, and yet we complain about Russian money in the UK property market. Well, and it's the same story with Australia, right? There's attacking in Xinjiang and the human rights abuses, and yet it's Chinese money that's propping up the Australian property markets. There's a bit of irony in that, but I think what you're suggesting is already playing out in terms of the social pressures. I think a lot of the hedge fund people and the business people are really being taken to task for what's going on at their businesses. I actually, a few days ago, bought a new brand of chocolate. I wonder if this is in the UK as well. It's called, I don't know if we're supposed to say the brand name. There's a particular brand name of chocolate, and their whole reason of being is that they don't use slave labor in their supply chains. I believe I saw a report that there actually is some in their supply chains that they discovered and they're trying to fix. So that's probably a good news story. I'm not accusing them of hypocrisy, but those sorts of marketing pitches are already starting to occur as well. So I think there's some social media pressure, and there's some marketing opportunities here. I think Uniqlo, the clothing brand, I've said the brand name. They've stopped using the Xinjiang cotton. That's a big story here. But I'm really ashamed to say this. I used to walk past the Falun Gong protesters in Melbourne who were displaying how they were being tortured, how they claim that they've been tortured in China, which is part of this Xinjiang story. It was part of our report. So I didn't pay attention. I didn't understand and realize what was going on. So maybe my consciousness has changed, and maybe that same process will happen for a whole bunch of other people in the next few years.
Yes, it is interesting to see some of the fashion companies kind of do an about turn. There were some that actually took down their statement that they didn't use slave labor as a result of pressure from the Chinese Communist Party, which, when you think about it, is quite remarkable. Like, you're taking down your commitment to not using slave labor in your supply chains in order to appease a political organization. Quite remarkable indeed. I do hope that has answered your question, Apple, to a greater or a lesser extent. I thought it would be good to dive into some of the longer questions that we have received in the chat at this point, because some of them are quite in depth. So this one comes from Kay, who asks, if the euro is going to die, then as it works so well for the German economy, are we going to get some sort of two-tier Super League version that the big players in Europe will use to replace it? Quite an interesting one there, Nikolai. Could you take it away?
Yeah, so historically what happens when projects like the euro come into being, and this isn't the first time, is that you return to what's called a Deutschmark zone. So the core countries, the ones that are most similar to Germany, stick with the currency peg or the common currency, and they go that way, and the others sort of fall away and do their own thing because they're trying to devalue to try and keep their debts under control. That is, I think, the most likely outcome of all of this, that sort of country by country leaves the euro, and it doesn't sort of just disappear overnight. And the euro doesn't die; it just becomes Deutschmark zone again, as it has not often, for several times in the past. But there's some risks of things going in other ways. I don't think the two-tier story is likely because of how obvious it makes the political situation. I mean, imagine a country going from one tier to another. That's quite, and the whole point is that it's one currency with one exchange rate. So if you're not going to have your own currency and the benefits of having your own currency, why sign up to a two-tier system? Why not just have your own? You might as well just go your own way and get all of those benefits rather than having an awkward hybrid in between system. There is still a chance that the Germans are the ones to leave this time. And the new trend of inflation has made that disproportionately likely, more likely than it was in my book, analyzing the various possibilities of how this could unfold. So that inflation side's change those probabilities. But the two-tier story, I can't see it working or being a viable idea. For the euro to break, something pretty dramatic has to happen. And the two-tier format wouldn't be the obvious breaking of the euro.
Right. We have another rather long question. This one from Yair or Yair. Apologies if I've mispronounced that. Yair or Yair. Do you agree with Milton Friedman's view of not needing a central bank? If yes, what is so terrible about the European central bank conflict between Northern and Southern Europe in regard to interest rates? In a true free market, the interest rate would be just as unfair when setting rates. What do you make of that?
I think Milton's argument was that you should have a rules-based monetary policy. I think he still had a central bank in that system. I'm in favor of not having a central bank. And that wasn't that controversial, unusual an idea not that long ago. I'm confused by the second half. So in a free market of money, you would have each different bank issuing their own currency effectively. That's why there's still 10 different note issuing banks in the UK. And if you can name the 4 Scottish ones, Boaz, I'll put you on the spot.
I thought it was 6 Scottish ones and it's 4 Northern Irish ones, but I could be wrong.
I'm pretty sure there's only 4 in Scotland. Clydesdale Bank, Bank of Scotland, Royal Bank of Scotland, and...
you got me on the spot. It's Bank of Scotland, BOS, isn't it?
Yeah, I think I said that. And anyway, the point is, there's 10 different note issuing banks in the UK because there's a historical remnant of the free banking era where banks would issue their own currency. That's the free market system. The interest rate story, if it's supply and demand for each government rather than a central bank setting the interest rate and controlling the interest rate, that's a fundamentally different story. The problem with the financial system as it stands is that the government bond rate is like the reference rate for everything. It's like the bedrock of the financial system. So when central banks interfere in that, it's like they interfere in all prices, in the whole structure of the economy. They cause malinvestments to happen. So I recently did a video with Dr. Mark Thornton about the skyscraper index, and that's the idea that there's a record-breaking skyscraper shortly before a crash in the economy or financial markets, which sounds like just a crazy idea, just a coincidence, probably isn't even true. But actually, once you look into it, a record-breaking skyscraper is exactly what you would expect to occur if interest rates have been artificially lowered by the central bank to spur on investment. And there's 3 reasons for that he gives. Maybe we can link to the video on YouTube in the YouTube version of this video. And so this skyscraper signal works for a reason, and that record-breaking skyscraper is a sign of malinvestment, of a mistaken investment that happens as a result of a suppressed interest rate. Historically speaking, at some point, to try and rein in inflation, interest rates then have to be raised too high by the central government authority that's controlling interest rates. That's what causes the crash. So this manipulation of interest rates is actually what's causing the boom and bust cycle in the economy rather than mitigating it. They're doing the opposite of what they're claiming. In a free market, that interest rate wouldn't be manipulated in that way. It would be the equilibrium between savers and borrowers, demand and supply for money. And so you wouldn't have that boom bust cycle as a result, at least not because of monetary policy manipulation. And you wouldn't have the malinvestments. Austrian economists call it the cluster of errors. So you wouldn't have the malinvestments happen in a big boom and then a big bust. There would still be lots of mistaken investments in the economy. Lots of people would invest in things that don't make sense, but they wouldn't be clustered in a group because an artificially low interest rates encourage those to persist for longer than they otherwise would. So this manipulation of interest rates is causing a huge amount of damage, a huge amount of problems. It's having the opposite effect to what it's supposed to. And in a free market, you wouldn't have that particular problem, which is the dominant problem of our time after the housing bubble in 2007 and the that's the cause. It's that artificially interest rate, that artificially loose monetary policy, which we wouldn't have in a free market.
Yeah, I believe Yar is referring to maybe simply the fact that you would end up with differing interest rates in different regions as a result of the ECB. If the ECB were to sort of stop messing around with interest rates in the Eurozone to try and make them all uniform.
Yeah. That would be fair, not unfair, though.
That's what I would think as well. Perhaps we've misunderstood the question, but Yar, I hope that does answer it to some degree. Seamus does ask, either way, would Germany not end up with the risk of default by the Southern Bloc in the event of the end of the euro? They currently get IOUs under the Target 2 mechanism. Do they not? Good question, Seamus. Nikolai, I'm sure you've got a good answer for this.
The Target 2 system. It is technically true,
doesn't it?
Yes, but this is a headache to explain because it doesn't make sense. It inherently doesn't make sense. So how can I explain it to you? So yes, they technically get IOUs under the Target 2 system, but that debt is never actually repaid unless the trade balance reverses. So the only way the Germans are going to collect the Target 2 credit is if they stop selling cars to Greece and Italy, and Italy and Greece sell more olive oil to Germany. And then over time, the Target 2 trends would return back to normal. That is the only way it's going to happen. And so that is the particular scenario which is very unlikely to happen inside the euro because the exchange rates cannot adjust in order to bring the trade balances back to normality. So the Greek drachma cannot fall against the German Deutschmark because both countries are stuck in the euro, and therefore the trade balances will not return back to normal. So specifically, the reason for the Target 2 balances getting out of whack is the existence of the euro, and unless you get rid of the euro, they won't converge. So the Target 2 IOU is sort of it's a debt, but not a debt. It's an asset for Germany, but it's not really worth anything because it's never going to be repaid. The interesting angle right now is that, and I think I forgot to mention this in the How the Euro Dies book, I believe the European Central Bank monetary policy interest rate is applied to target 2 balances, right? So if the ECB raises interest rates, my understanding is that Italy and Spain will start having to pay interest on the target 2 balance. I don't know if that interest just accrues onto their balance or if they actually have to pay something. But those target 2 balances might finally start to matter again if the ECB raises interest rates at all. And I don't think that's understood by many people in the policy arena or in financial market arenas. And so there's this potential for the target 2 system, which was a big topic in 2010 to 12, to suddenly come back, and for politicians in Greece and Italy and Spain to say that the euro is causing a huge imbalance, a huge problem in the target 2 system. And, they don't have to explain it properly. It can just become a boogeyman, and everyone can start to panic again about something they don't understand. But there's that risk of that happening again.
We are at risk indeed of going far too much into the weeds when it comes to the esoteric plumbing of the Eurozone and boring people about what target 2 balances are and things like that. But I hope that has answered the question to a greater or lesser extent. We are going slightly into overtime. Maybe there's time for a couple more questions before we end it for today. It has been a very good conversation, as ever, Nikolai. Andrew in the chat is long johns and short crust pastry. I don't know exactly what he's meaning by long johns, as there are a lot of people named John in the chat today for that matter. But it is good to see some long and shorts from the audience. Medina Man is long on tin food, petrol, and candles. Very bearish on probably general civilization, I think. And in terms of just to sign us off for today's show, Nikolai, could you give us sort of a general your general outlook for the next 3 months, or something that you think we should be looking for in the first half of this year, as we have just begun it?
I think that if inflation doesn't start to fall in the next 3 months, we're in trouble. So up until now, or up until in 3 months' time, I believe that the narrative that the inflation has been triggered by supply chain crisis, COVID, energy policies, whatever you want to point to, but not monetary policy, is reasonable, is plausible. With the monetary side not having had an impact or a big impact up until now, or up until in 3 months' time. That doesn't mean the monetary side of inflation won't happen. It doesn't mean it's not about to happen. The question is whether it's starting. And I think at some point, the supply chain crisis story has to just start to look a bit weak. And people have to wake up and start to think about, maybe this is a monetary issue and we're getting monetary inflation rather than inflation driven by supply chain issues. So cost push, economists like to call it. So I'm really worried that the inflation continues, and central bankers basically panic. And they realize that not only have they been a little bit wrong about inflation not happening, being transitory, being temporary, being supply chain driven, that they realize that they really are fueling a monetary form of inflation, loose monetary policy, correlation. And the level at which interest rates would have to be raised in order to stop that, because it's been allowed to run on for so long, for so far, would be so high that those interest rates would cause a very severe sort of crisis. So severe that you and I would be able to afford to buy a house, Boaz. That's how bad I'm talking here. So I think people are probably getting sick of the inflation story by now, because it's been going for a while now. But I think that key inflection point of maybe it's not just the supply chain crisis is coming in the next 3 months. And I'm going to be watching those month-over-month changes really closely, much more closely than I have been over the past 6 months since the inflation started. And I'm going to be asking John Butler about this in Fortune and Freedom to discover some signs of whether inflation is going to take on a more monetary flavor, such as the velocity of money and that sort of thing.
We did get a question earlier from Oliver who asked, do you think central banks will try to curb inflation with raising interest rates and cause a recession? It sounds like that's something that you think definitely may happen, and that's a big risk, right?
Yeah, so that's what I think we should be watching the inflation figures really closely now, because the central bankers like to talk about their credibility. And they've started to admit their credibility is at risk here because they've been saying that inflation won't happen, and it did, and they've been trying to explain it away, and it's continued. So yeah, we're at that point now. I think I don't know if it's in the next 3 months, but that's around about the time that's my best guess of when, if it is monetary, that's when we'll start to realize. And if that's what happens, then they might try and well, I don't know. It's the impossible scenario, right? Of trigger another financial crisis and get the blame for it, or allow inflation to continue and get blamed for it.
Yeah, it's almost like we're in the period where the emperor has started to realize that everyone else has started to realize that he's not wearing anything. And what the emperor does next is what we're all waiting for, I suppose.
What happens in the story? I don't know what the emperor does. Does he just run away and squeal?
He loses his credibility, and as a result, he's. I think that was the end of his reign and his mighty empire. But it's been a very long time since I heard that one. So maybe we should read it again for some insight.
Yes, we need to double check.
Well, very good, Nikolai. It has been a great conversation. One last one. This was from earlier in the chat. Did see a question on the whether or not the Japanese stock market is a good opportunity, the Nikkei. As you are in Japan, you are uniquely able to answer this question, I think. It has been a very interesting story seeing the Nikkei. I had a very good time for a while last year. What's your thoughts on Japan and investing in Japan more broadly?
Yep. So my wife's Japanese, so you'd think I could convince her to open a Japanese stock brokerage account in her name and buy some stocks. The problem with Japan, and I'm completely mystified why so many of the people we follow started their careers in Japan. Have you noticed that as well? They were in Japan during the bubble and saw it bust. A lot of the commentators, the hedge fund managers, fund managers, we like to follow and read, were in Japan or in Asia, watching Japan closely during the bubble or during the aftermath of the bubble, and a lot of their formative years were part of that. But I can't. I mean, I can't go to the local supermarket without some sort of misunderstanding. And you want me to buy Japanese stocks? Like I've just learned that the longer I stay here, the less I know about Japan. It's one of those challenges. So I think I'm going to stick to buying groceries and deciphering food labels. If I buy cereal, it's the sugar-free version, and it tastes rubbish because I can't. I'm still at that level, let alone the stock market.
Yeah, you did send me some powdered children's beer for Christmas, Nikolai. That was a very interesting drink, I must say. I similarly could not decipher anything on the label other than it had a cartoon image of a kid drinking beer. Very interesting. Great Christmas present, I must say. I do appreciate it. Lastly, Seamus says that the story ends when a child tells them the truth and gets made an advisor to the emperor, who lives happily ever after on his massive gold holdings. So how accurate Seamus's recounting is, I'm not sure, but we shall have to look into it.
That's
the
Irish version of the story.
I think we'll end it there, Nikolai, for this episode. It has been a great chat. Thanks for taking the time out of your evening to join us for this. It is only, it's the end of lunchtime now. But yeah, thank you so much. Nikolai, could you tell us, lastly, what it is you focus on and how our audience can read more of your work?
Yeah, fortuneandfreedom.com is the best place. There's a free newsletter and discusses all the things we've talked about here. That's definitely the best place to go. If you're already subscribed, check out UK Independent Wealth on the Southbank Investment Research website.
Very good indeed. Well, there you go, folks. That was episode 31 of Southbank Live. We did do it at a different time this week. We shall be back to the evening schedule next week, where we shall be hosting Kit Winder, I believe, who will be telling us all about New World investing, whatever that is. If you want to find out, do tune in. I think it will be 7 p.m. next Thursday. That's all from us for the moment. Thank you so much for joining us, and we'll see you in the next one. Bye-bye.